Morning, everybody. This is Eureka John, Eureka Street Crypto Hub, broadcasting live from Leander, Texas. It is 5:35 in the morning on April 30th, 2021, and it is a Friday. I'm so happy this week is wrapping up. It's been a long, busy week, and busy with work and stuff. So just doing what I can do to get some crypto content out to you guys. And this is basically for myself as well, and mainly for myself. This is a video blog in which I'm just kind of documenting and tracking my progress and learning about this entire crypto space. And so you're watching it as it happens. No cutting, no editing. I'm not trying to make myself look like some kind of pro, because I'm not. And I'm not a teacher, and I'm not a financial advisor or a professional anything. I'm just a dude here exploring different crypto projects and putting a camera on me so I can track my progress. And I have looked back at previous videos. A lot of them are like really cringy. I mean, they still kind of are too. But whatever, I've learned a lot. I've gotten in touch with a lot of people who have watched these videos or listened to them, and they've given me advice and help, or asked me questions and prompted me to go in and find answers for them. And this is great. It's inspired me and found me a way to learn about this space and not feel so alone doing so. So if you feel alone in this crypto space because all your friends and family have no idea what you're talking about, and you're just annoying them constantly with crypto talk, well, this is possibly a good option for you. So, so look into it and feel free to reach out to me. I know a few people have reached out to me for specific projects, which is why I have talked about some projects. That's why I'm working on this Komodo video right now. I know I keep saying I'm working on it. It's just, work. Actually, my real job gets in the way. And then, it's why I've done various other projects like Pirate Chain. I'm looking to this token called Wow Narrow that I'll talk about tomorrow. It's like, it's like, wow, man. And then, so that's why I'm doing this redo of BTCST, and in the process I discovered this pBTC35A token, which I'm getting ready to talk about here this morning. So there's always something to uncover in this crypto market. So that being said, alright, I've been going to Transaction Street and doing the traffic report, but honestly there's not much happening in the traffic right now, so let's go straight to the CoinGecko. And I'm sure some of you will be just fine with that. So Bitcoin price is at $54,413.09, and Ethereum is at $27.80 and 27 cents. Ethereum has been outperforming Bitcoin, and that's pretty incredible. Will there ever be a flippening? I don't know, but I mean, I think Ethereum is going to hit 3,000 very, very soon. It's been poking with it and toying with it, but it won't quite get up there just yet. But I think it's only a matter of time. DeFi is on its second wave and second boom. However, Bitcoin has also been jumping into the DeFi space in a lot of ways as of late. So we'll look at that here in a second as well. The thing about Bitcoin is the last Friday of every month, apparently, a lot of options expire. And if you don't know what options are, it's when traders basically set a price, and it's a future. They set a future price, and a lot of times they do this on leverage, which means they've borrowed money to be able to do this. And if that option expires, then they have the option to buy the Bitcoin at that price. And if they don't, then I think they lose what they paid for Bitcoin. I'm the worst person to ask about that. So we'll ask Decrypt here. Decrypt says 3.6 billion in options, Bitcoin options expire Friday. Here's what that means. It's why I don't play with options. I was on Robinhood and I messed around with options and I lost my butt because I suck at that stuff. In brief, crypto derivatives exchange is sitting on 3.6 billion in ticking Bitcoin options. Bitcoin is currently hovering near the max pain price for optional holders. About 3.6 billion in Bitcoin options are due to expire tomorrow, giving speculators their last chance to either buy the asset at a predetermined price or sell. Okay. Yeah, and if they sell, they potentially lose a lot of money if the option did not hit their target price. Am I saying this right? Okay. If many investors choose the latter, expect to see more Bitcoin available in the market if they exercise their option. It could push the price up. And I'm starting to see this like every single month. Everybody's starting to be like, oh, but the option is going to expire. So it's okay. But it never really budges the Bitcoin market much. You know, a lot of people say that it's going to budge the Bitcoin market or move it dramatically. And I'm finding that people in this financial world are an emotional lot. The data from Arcane Research pegs the number of expiring options contracts at 68,500 Bitcoin on unregulated Deribit, the largest crypto derivatives exchange in the world. Arcane asserts that the max pain price to be 54,000. Max pain price refers to the price at which the cumulative value of the option still held is the lowest. In other words, traders don't get much of a discount to just buying Bitcoin on the open market, but they do experience financial losses from having bought the options and let them expire. Bitcoin's price has fallen in the last 48 hours from 54,800 to 52,900, meaning that exercising the option will be a game time decision for many. Given how Bitcoin is currently trading around the max pain price of the April options expiry, it does seem neither bearish nor bullish for Bitcoin in the short term. So on the flip side, this is the favorable expiry price for all options sellers, so they like prices to remain at these levels until expiry on Friday. Bitcoin options contracts give traders a chance, but not the obligation, to buy Bitcoin at a set price. Can typically be traded up until the last Friday of each month. They offer different price levels at which traders can pull the trigger and buy the asset. Of course, each contract is structured differently with different buy options depending on when it was bought. So that's basically what the options contracts are. They're just trying to predict a price at a future point in time, and and they have committed to that, and they have the option, and they've bought the option to do that. And if the price is favorable to them, they could win a lot of money, and if it is not, they could lose a lot of money. So it's just basically gambling. If you don't know what options are. Yeah, how you doing, Valery Merev? Nice to see you again this morning. Yes, getting a lot of repeat people. I'm also broadcasting live on Theta Network, if you did not know. So tune into Theta Network, and if you're watching on YouTube, go over to Odyssey and Library.tv and watch videos there. Most of the same stuff on YouTube is over on Odyssey now, because a lot of people are migrating over there, because Odyssey is decentralized. They don't censor your content, and you can earn the library token by watching the videos. So they don't have all those annoying commercials jumping in the middle either. So yeah, Odyssey is way better. Why would you not watch videos on Odyssey now? Like, especially with everything YouTube's been doing, all the shenanigans. So yeah, that's basically that on the Bitcoin. I'm kind of starting to see, from my low level perspective, the Bitcoin market starting to smooth out some. All this big institutional money is getting involved, and that's the main reason a lot of people didn't want to get involved in Bitcoin, because it's too volatile, and whatever, But the more people that are getting involved in Bitcoin, and the larger institutions buying into it, and corporations putting Bitcoin on their balance sheets, the more stable it's becoming over time. So it is becoming a store of value. Even that head muckety-muck guy over at the Federal Reserve said so. So let's go back over here. Binance is $617.35. XRP is $1.55. Tether is 99 cents. Cardano is $1.35. Dogecoin is at 31 cents. Polkadot's $35.75. Uniswap is $40.96. Litecoin $263.33. Bitcoin Cash $927.06. Chainlink $38.28, up 7.2%. Chainlink's going to be making moves soon. Sergey Nazarov just put out that white paper 2.0 along with the other 13 members of his team, and then 4 of them yesterday got up on a State of the Union address, I guess, with Chainlink, and explained in their terms a lot of what's going on with that. So even the critics didn't have a whole lot to say. Apparently this Eric Wall guy is like a major critic of everything, and I read a little bit of what he had to say, and he's sorry, and nothing he said really held any water, and sorry man, you can't poo-poo on the stinky linky. So yeah, all right, so let's go to what I was talking about today. This is kind of a 2-part series on Bitcoin Standard Hashrate token, and then another hashrate token that I've found is this Mars project done by the Poolin Bitcoin mining pool, and it is the largest Bitcoin mining pool, I believe. So I thought that BTCST was the only game in town. So it obviously is not. Yeah, I thought it was a completely unique token, but obviously it's not. And it appears that this Poolin and this pBTC35A token. This uses this BTCST website that I talked about yesterday. And basically it tokenizes the hash rate and the mining power, and there's a whole group of miners that have all grouped together to form the standard hash rate, and I guess it's kind of a DAO, and they've gathered together at 12% of the global Bitcoin hash rate, and you can buy a BTCST token which represents 0.1 terahash of Bitcoin hash rate, and so any Bitcoin that is mined from that 0.1 terahash that is represented by that token, you get in Bitcoin. So it's a pretty cool way to do it. I own some, and I've gone in here and I've staked it, and so I'm mining Bitcoin and T-Bitcoin, and I go into all that yesterday. T-Bitcoin is a synthetic of it. So here's another option though. I thought BTCST was the only dog in town. It is not. There's the Mars protocol here, and it came out just around the same time, if not a little bit before, around December 2020 or January 2021. Mars project. Okay, so here's the first Ethereum-based decentralized standardized hash rate protocol, because BTCST is based on the Binance Smart Chain, and this is based on Ethereum, which is pretty cool. Most DeFi is built on Ethereum now, so that may change with the advent of a lot of other virtual machine type of platforms building DeFi into it, but and then now with Bitcoin integrating itself into DeFi. But this is kind of a hybrid fusion between Bitcoin and Ethereum DeFi that is not a wrapped token. So Mars is the first Ethereum-based decentralized standardized hash rate protocol. Mars project combines standardized hash rate product and liquidity mining together, packing proof-of-work mining into an on-chain protocol. It offers consistent proof-of-work mining output that could be acutely calculated in the very beginning, offering an edge for users on mining stability. No more complicated variables on daily mining from now on. On the other hand, Mars would be distributed to users in this project, earning rewards from staking and liquidity providing, shorten the distance to DeFi to the Bitcoin community. Mars protocol consists of pBTC35A and the Mars token, and each pBTC35A represents 1 terahash rate, not 0.1, 1 terahash rate with predetermined power ratio. Mining rigs would be in pool and super hash rates custody during life cycle, while net profit on WBTC would be distributed per block. So you would mine, okay, so for BTCST, you're mining one BTCST token is 0.1 terahash rate, and you mine and you get BTCB back, which is Bitcoin on the Binance blockchain. And so with this, you buy the pBTC35A token, and that represents 1 terahash rate. And you, with that token, you are mining 1 terahash rate of the hash power, and you get back that amount of WBTC, wrapped BTC, distributed. And wrapped BTC is Bitcoin on the Ethereum blockchain. Neither of those are actual Bitcoin, but they are representative. So whenever you would sell BTCB or WBTC, you would get the equivalent in Bitcoin on the Bitcoin blockchain if you so desire to sell it. Or you could plug that BTCB or the WBTC into DeFi on each respective platform, and you would immediately be able to jump in and do DeFi. So this is how this DeFi all kind of combines together. In the first batch, pool and super hash rate would provide 50,000 pBTC35. Okay, that was just their initial offering here. How Mars Project works. To participate, Mars Project purchase pBTC35A from in-house store. You have to have basic KYC if you're going to buy directly from them, or you can buy this on Uniswap. Then carry pBTC35A to BTC Gold or BTC Gold 01 liquidity provider. And they're basically vaults. And you lock them up to realize the proof of work mining and gain the reward. Either way, you can get same WBTC while different on Mars. So you can lock up your Mars tokens as well. So there's 3 ways to do it. They talk about the Genesis Mars distribution. So let's go to the website here. Where is it? Just to give you a good look at the website. There's the Poolin website. These are all the different mining rigs that they have on here. So that's the company behind all this. So there's their blog. Let's find their actual website. No, not Tau Protocol. All right, so hold on. Let me see. Mars Project pBTC35A. All right. So. Here we go, mars.poolin.fi. That's the website I was looking for. Okay, so yeah, BTCST on the Binance side of things, which I don't particularly love because I don't really like Binance, but I like everything that they're doing over there. And then here it is, this one built on the Ethereum blockchain, or using the Ethereum blockchain. So here's all the vaults. Here's the 3 tokens. The Mars token, which is the governance token, current price at 4 cents. If this becomes successful, that could be quite a value, a bargain. There's the pBTC35A, which represents the Bitcoin hash power. And that has a supply of 220,000. So 1 pBTC35A represents 1 terahash of Bitcoin mining power. So it's a lot lower supply than the BTCST, which is 0.1 terahash. So it really kind of may equal out. I don't know. And then over here, you have the pETH18C token. That represents 1 mega hash per second. Is that what that means? Or 1,000 hashes per second of ETH? I don't know. But whatever, it represents Ethereum hashing power. And I need to get my education on my numerical units here because I'm kind of an ignoramus about that type of stuff. So anyway, this represents, so you can buy Ethereum mining hash power as well. Now I wonder what they're going to do about that once Ethereum starts transitioning over to proof of stake in Ethereum 2.0. I mean, it's already started transitioning over. It's pretty far into the process. So when they start phasing out proof of work mining for Ethereum, what's going to happen to this part of the project? I'll probably go into their Discord and their Telegram and ask them about that. Because I know that Ethereum mining may still be there. Is it going to completely fork and create like a new version of Ethereum? Like, I don't know. Anyway, what is Mars Project? Mars Project consists of 3 tokens, namely hashrate certificates pBTC35A, pETH18C, and governance token Mars. Each pBTC35A represents 1 terahash per second of Bitcoin mining power, while 1 pETH18C is collateralized by 1 mega hash Ethereum mining power. Operation and maintenance service is provided by the Pool and Super Hashrate Center. Yields will be distributed via corresponding pools on chain. Staking, stake pBTC35A to earn WBTC and Mars. So you earn both of these tokens from staking that. and then you stake the Ethereum pETH18C to earn ETH and Mars. So you earn Ethereum and Mars, so you can earn Ethereum directly. Liquidity providing, supply liquidity to Uniswap, and then supply liquidity to, okay, so to the pBTC35A tether pool or the pETH18C tether pool to earn ETH and Mars. Okay, and all this is Chinese, so I don't understand that. But I was looking at this, and the current supply is, okay, it's basically all bought out for the Ethereum one. So I'll come over here, introducing Mars. Okay, that's where I just was. Let's go into farming. So here's how it works. You select a pool, and first you go into Uniswap and you buy it, and then you come over here, you connect your wallet, and I have my MetaMask connected, and you would lock it up in any of these vaults here. And I'm not really sure what 1x, 6x, and all this stuff is. But the APIs are pretty good, 198.54. Oh. Okay, so interesting stuff here. Let me go here to purchase hashrate certificate so I can show you this. Looks like this Ethereum one is pretty much sold out. There's only 0.78 of these tokens available. So 999,000 and 999.2127. 999,999.2127 are sold. So there's only 0.7872 available of the Ethereum hashrate token. So yeah, good luck getting that one. And then the Bitcoin one is worth, it started out as a price at a price of $100, 100 tether. Now it's 150 tether. So there's only 17,000 of those available, and then you have the option to buy it using KYC, and you can get 5% off or 10% off if you commit to a lockup. And if you just want to buy it without a lockup, you can pay full price for it. Then you can purchase right here, or you can buy it on Uniswap. And so again, you can provide, so the block reward is 6.25 BTC. It's tracking all that with the mining parameters. And then they add in the fees and the electricity and stuff like that, the mining pool fees, I guess, is subtracted from it. So yeah, interesting stuff. Just a different option and a different way to look at a lot of this standardized hash rate type of stuff, and a way to earn rewards off of tokenized hash rate, a different way to do DeFi. And yeah, there's an article over here that the founder, the CEO of Standard Hashrate, which is the creator of BTCST, he wrote on the CoinMarketCap website, bridging the gap between Bitcoin and the DeFi space. DeFi and Bitcoin are separate entities. I mean, obviously he doesn't talk about the Mars protocol on this because he's all about that BTCST, and Mars is a direct competitor. But he does kind of explain it pretty well about, you know, Bitcoin and the DeFi space. DeFi and Bitcoin have been enjoying meteoric rises and some meteoric crashes in the past year. The DeFi market grew by 210 times in a single year, whereas Bitcoin's value rose 780%. And now with a crypto crash in which Bitcoin plummeted below 50K with $500 billion wiped from the market, there are very seldom slow days in the crypto space. Two of the biggest areas within crypto are Bitcoin and DeFi, and they're often misconstrued as separate entities. This is because the vast majority of DeFi applications and protocols are built and run on the Ethereum blockchain. But as we see rapid and unprecedented growth of Bitcoin, there's increasing demand for the cryptocurrency to merge with DeFi, given that Bitcoin holders are natural fits for this space. Fortunately, there are several user-friendly and accessible entry points for Bitcoin holders and those with idle Bitcoin assets to enter the DeFi market. How can Bitcoin be used in DeFi? Through the wrapped tokens. And a while back, a few months ago, I did an entire video on wrapped Bitcoin and what that is and how you buy it and all that stuff. So you can go back to that video and look at it. But basically, it is a way to take Bitcoin, because Bitcoin and Ethereum are on two separate blockchains, and they don't play well together. So there's some code in which you can go in and you can take your Bitcoin and you can, you know, metaphorically wrap it up and then take a representative of that Bitcoin and put it on the Ethereum blockchain, so you can play with Bitcoin and borrow against it, earn yield off it and everything like that. in the Ethereum DeFi space. And then whenever you're done, all you gotta do is sell that WBTC token, and that's burned, and everything's transferred back over to Bitcoin. A lot of Bitcoin people, purists, don't like this because they say it's not safe. You know, it's vulnerable to hacks and stuff like that, and they just want to put it under lock and key and write it on their little piece of paper with their seed phrase or their ledger and store it away in a shoebox in a closet somewhere, which is fine too. Everybody pick your poison. What you gonna do? What's your philosophy in life? You know, how dangerous do you think the daily world is? So that's all personal preference. You go from the major extremes, from like Howard Hughes over here, never leaving the hotel room because he's afraid of germs, all the way to Oscar the trash guy. So yeah, Oscar the Grouch. Anyway, a market-leading tokenization of Bitcoin is wrapped Bitcoin. WBTC is the first ERC20 token that is backed one-to-one Bitcoin. It allows decentralized applications on the Ethereum network to integrate Bitcoin in a tokenized form. This is possible because wrapped tokens have a liquidity of ERC20 tokens, allowing versions of Bitcoin to be traded and exchanged with the DeFi space. Besides WBTC, which consists of over 1 million mined Bitcoins on the Ethereum blockchain, another token is bringing Bitcoin and DeFi together. That's hashrate tokens, which we've been talking about, the BTCST and the pBTC35A tokens. Unlike WBTC, there is no custodian because all the on-chain transactions occur on Binance Smart Chain for the BTCST. So there's no custodian needed like BitGo in the case of wrapped Bitcoin. Custodians are big centralized asset trust companies. And then there is also, they did not mention RenBTC, which is a decentralized wrapped Bitcoin custodian type of service. So the Ren protocol, I do cover that in my wrapped BTC. That's a whole other rabbit hole I can't go down right now. But they're basically ways to safeguard your wrapped Bitcoin. So yeah. So yeah, and then so what about loaning out Bitcoin to earn rewards? So you can take the wrapped Bitcoin or you can loan it out. Another method of entering the DeFi space is through crypto margin lending and staking. For Bitcoin holders, this is becoming increasingly popular as it helps holders earn yield on their Bitcoin assets. To facilitate this, some decentralized exchanges enable holders to trade Bitcoin freely. They include Atomics and JellySwap, which provide low-level APIs to help with integration. And I just 2 days ago spoke about the BISC exchange. It's a peer-to-peer network. And there's Atomic DEX that is coming out, or that came out on the Komodo chain. And these are all going to allow atomic swaps and peer-to-peer trading with Bitcoin as well, even from fiat if you use a VPN in the United States. So yeah, it's something to look for there. Hey, how you doing, Fody Rebecca? Nice to see you today. Man, nice. I'm glad to see a lot of people jumping in and returning and saying hi. This is making me feel not so alone in the crypto space, because in the real world with your friends and family who absolutely know nothing about what you're talking about, it can be a little lonely. So yeah, building a little bit of a community, and like I said at the beginning of the video, if you find yourself alone in this space, maybe you could document your progress as well, and I'll watch your videos. Of course, earning yield on Bitcoin in the decentralized finance market is not as simple as buying Bitcoin and depositing it into a centralized lending app like BlockFi or Nexo. So you can put it in BlockFi or Nexo or Celsius, and you can earn yield on the Bitcoin. Bitcoin holders are required to either tokenize their Bitcoin or buy tokenized Bitcoin on central exchanges such as PancakeSwap for BNB wrapped Bitcoin or Uniswap for ETH wrapped Bitcoin. That's for the decentralized space. Centralized apps are BlockFi, Nexo, and Celsius. So there's two ways you can go about it. Alternatively, DeFi users can deposit tokenized Bitcoin in trading or lending pools to generate yield. Users can deposit their WBTC into lending protocols such as Aave or Compound, and they can deposit their WBTC into decentralized liquidity pools to earn liquidity mining returns on Curve Finance or Harvest Finance platforms. So you can choose to go centralized or decentralized with your Bitcoin on DeFi. You can go the centralized routes like BlockFi and Nexo and Celsius, or you can go the decentralized routes by going into something like wrapping your BTC, buying it on Uniswap, or you can go into WBTC Cafe and get it wrapped there. And then you can go into protocols like Aave and Curve and Harvest and Compound and all that stuff, and you can lock it up and borrow against it or earn yield on it. And anyway, so those are Bitcoin loans. The rise in Bitcoin loans is a different method that's bridging the gap between DeFi and Bitcoin, such as Aave and Cream, offering crypto lending services. They basically specifically, these are specifically Bitcoin loans at competitive rates, so you can borrow Bitcoin as well if you want to play around in the market. There's now ways to borrow without collateral, like flash loans, but those are for like basically crypto geniuses, and I do not have the ability or the brains or the time to figure out flash loans right now. But I know that they're possible on Aave, so it's something if you want to look into. And there are ways to build flash loans by using certain apps where you can just drag and drop little Lego blocks, but still you have to look for arbitrage opportunities and stuff like that, and you kind of have to really immerse yourself in the market to figure out where those are. What are the effects if Bitcoin becomes more prevalent in DeFi? The prospect of more widespread decentralized financial protocols is tempting enough by adding the potential for Bitcoin to be freely traded on other blockchain platforms with more wrapped Bitcoin assets. The total value of locked of both Bitcoin and DeFi will reach new heights. I absolutely believe that. By adding extra liquidity to Bitcoin, there are further options for increased use cases in the mainstream. The concept of decentralized finance can significantly enhance the existing powers of Bitcoin by allowing for easier swaps and options for staking through the use of wrapped tokens. With regular Bitcoin, these everyday DeFi activities are more difficult or near impossible. He does not mention block stacks on this, and block stacks is a layer being built on top of Bitcoin to allow DeFi to happen. So block stacks is definitely something else to look out for. So there are a few things he does not mention. He doesn't mention Celsius as a centralized platform. He doesn't mention the Mars protocol. He does not mention block stacks. So there is a lot more to this space than he's mentioning here. But he's obviously the CEO of the Standard Hashrate group, and he has his own interests at heart and in mind as well. So you can't blame a guy for that. But anyway, back to this Mars project. So you have basically right now two major choices if you're going to buy tokenized hash rate. And this is different than going in here and buying mining, cloud mining. So you can buy cloud mining on here, and that's different than buying tokenized hash rate. Cloud mining is kind of where you sign up for a plan, and basically you monitor their mining power, and you get a percentage of that by signing up to a subscription. This is where you hold a token that represents a certain amount of hash rate, and you can stake it. So you have two options. You have Mars using the pool-in and the pBTC35A, and that is going on the Ethereum blockchain. Or you have BTCST over here using the Binance Smart Chain, and you can do the same thing. You can lock it up and stake it and everything like that, and provide liquidity on the PancakeSwap platform. So you can provide liquidity on the Uniswap platform with the Mars protocol, or you can provide liquidity on the PancakeSwap with the BTCST Standard Hashrate protocol. So pick your poison. It just depends on which one you like better, I'm not going to say which one I think is better. I think they both have benefits. Mars protocol is utilizing the most dominant and widespread used decentralized network, which is Ethereum. And then BTCST, with everything that they have going right now with the Sora protocol, and the Sora trying to bring out this new economic order, and then combining, and then they have built the PolkaSwap platform, and then working with the Polkadot ecosystem, and then BTC being basically the BTCST token basically being the backbone and the peg for the stability of all that platform. That is a huge thing, because they're working out CBDCs with the Bank of Cambodia, and yeah, they're going into some major central banking stuff over there. So if that gains traction, all that, anything associated with that is going to be worth a lot over on the BTCST side. So I don't know. They're both interesting options. They're both going in different directions, but right now they are competitors. So I'll let you be the judge. So all right. That being said, I have to get on with my day and do the deal. Get to work. It is Friday. I will be back tomorrow. I want to go over some crappy little crap coins and stuff like that, because it's gonna be Saturday and I want to have some fun, and I want to finish up this Komodo video finally. And yeah, man, just do the deal. So have a good Friday. Yeah, hopefully your boss treats you right at work if you have to go to work. And if you're done with your day, congratulations. If you're on the other side of the world, you've made it one more day in this life. And if you've had a terrible day, you know what? Tomorrow's probably going to be better. So, you know. All right, man. I will talk to you